In this class, we shall see the accounting procedure in a partnership firm when a partner is died. The death of a partner. The partnership comes to an end immediately whenever a partner dies, although the firm may continue with the remaining partners. So, when a partner dies, the partnership which is made between the partners comes to an end. That partnership will be closed, but the partnership form will be continued with the remaining partners other than deceased partner. So, partnership form continues, but the partnership with the deceased one stops. It comes to an end. The deceased partner is entitled to get his share in the firm as per the provision of a partnership agreement. So, the person who is deceased, who is died, the heirs or the executors have the right to get the share in the firm's profits, goodwill, and the total amount which is invested by him as per the terms of the agreement. So, partnership agreement is most crucial when it may be admission, when it may be retirement, when it may be death. So, as per the agreement of the partnership, the deceased partner will get the share. His share in the firm is calculated in the same manner as in the case of a retiring partner. So, the deceased partner is entitled to get its share, and his share in the firm is calculated as in the same manner in the case of the retiring partner. So, the same procedure will be followed, which we followed in the retirement of a partner. Yes. Accounting treatment. Deceased partners share in the profits. If a partner dies on any date after the date of the balance sheet, then his share of profit is calculated from the beginning of the year to the date of death on the basis of time or sales. So the accounting treatment of the deceased partner's share in the profits can be done in two methods, in two ways, either of the two ways. One is on the basis of time. The other is on the basis of sales. On the basis of time. So on the basis of time, for example, the time is calculated from the balance sheet date, that is the financial year starting date to the date of death. The total days or months are calculated, and then the profit is ascertained and calculated. On the basis of the sales, the profit is calculated, the sales which have been done by the firm up to the date of the death of the partner. When share of profit is calculated on the basis of time, it may be on the basis of previous year's profit or average profit of the past years. We may take into consideration either of the previous year profit or average profit of past years as per the information given in the problem. So on time basis, see the profit calculation on time basis. So first one, profit from the date of last balance sheet to the date of death or retirement. But we are seeing regarding the death. So number of days or months from the date of last balance sheet to the date of death divided by 365 days or 12 months into previous year profits or average profits of a given number of past years. So balance the number of days or months from the date of last balance sheet to the date of death divided by 365 days or 12 months. If it is given months, should take months. If it is given in days, we should take 365 days. Into previous year's profit or average profit of a given number of past years. The profits which are earned in the past years, in the previous years, or made average. So based on that average, the profit is calculated. So as based on the information given in the problem, we have to calculate either the average profit or profit of the previous year. This is on sales basis. On sales basis. See this. Profit from the date of last balance sheet to the date of death. For that, sales from the date of the last balance sheet to the date of death. So first we are taking the sales up to date of death, divided by previous year's sales or average sales, into previous year's profits or average profits of a given number of past years. With this, we can calculate the profit which is earned by the firm from the last balance sheet date to till date, that is the date of death of a partner. Journal entries in case of profit. In case of profit, profit and loss suspense account to debtor to deceased partner's capital account. Profit and loss suspense account debtor to deceased partner's capital account. In case of profit, if it is a loss, if the firm is earned loss, incurred losses, deceased partner's capital account debtor to profit and loss suspense account. See these two entries carefully. If the firm is earned the profit, the entry is profit and loss suspense account debtor to deceased partner's capital account. But if it is incurred losses, the company or the firm, the partnership firm incurred losses, deceased partner's capital account debtor to profit and loss suspense account. So these are the two entries. For the profit is one, and the other entry is for loss. These are journal entries. And now ascertainment of the amount due to the deceased partner. See this. The deceased partner's share is also calculated in the same manner as in the case of a retiring partner. Just now we have discussed that we follow the same guidelines, same procedure of retiring partners instance. Amount due to deceased partner shown by his capital account is transferred to his executor's account. That's all. Earlier, in the retirement, it was transferred to the partner's loan account. It was transferred to the partner's loan account. But in the case of death of a partner, the amount due to a deceased partner is transferred to his executor's account by passing the journal entry. See it carefully. Now, see the journal entry. This is a partner's capital account debtor to deceased partner's executor's account. The amount which is which the balance amount of the capital of the deceased partner is transferred to the deceased partner's executor's account. So deceased partners capital account data to deceased partners executors account. This is a journal entry. Now, settlement of deceased partners executor account. If payment is made in full or lump sum at a time, deceased partners executors account data to cash account. First, the amount of the deceased partners capital account is transferred to the deceased partners executors account. Just now we have seen in the above entry. Now, if the payment is made to the executor, the entry is deceased partners executors account data to cash if it is paid in cash, to bank if it is paid through check. See the entry carefully. Full amount of the deceased partner's balance is paid to the executors. If it is paid in full or in lump sum or at a time, deceased partners executors account data to cash account or bank account. Okay. Now, if payment is made in installments, the entry is deceased partners executors account data to deceased partners executors loan account. And for interest account data to deceased partners executors loan account. Interest is generally paid to deceased partners executors at the rate of 6% per annum. Or if it is mentioned in the partnership deed, it may be higher or it may be lower. So deceased partners executors loan account data to cash account. This is another entry. By paying cash, deceased partners executors loan account. Yes. Now this is the format of capital account. Deceased partners capital account. Here you see the balance. It is credit side of the deceased partners capital account. Balance by interest on capital, by salary and commission, by undistributed profits, by revaluation account if it is profit. See carefully if it is profit. Gaining partners capital account, share of goodwill, and profit and loss suspense account. This is our most important aspect in the death of a partner. Share in profits till death. It is seen at the first of the solution. We have seen in the beginning of this class. Share in profits till death. So these points are seen at the credit side of the deceased partner's capital account. See once again, balance brought down, interest on capital, this is income to him, salary and commission, it is increasing the capital, and undistributed profits, revaluation account profit, share of goodwill, profit and loss suspense account. And now if we see at the debit side, this is the debit side. Capital of the deceased partner. Debit side, undistributed losses, profit and loss account. At the assets side, revaluation account if it is loss. Revaluation account if it is loss. Goodwill account if it is written off. The goodwill is written off, should be mentioned at the debit side. Drawings of the partner. Interest on drawings. Profit and loss suspense account if the loss is incurred from the last balance sheet date to till date, share in losses is mentioned at the debit side. So the balancing figure is transferred to deceased partner's executor's account. Deceased partner's executor's account, balancing figure. So this is the pro forma of the capital account. We shall see a problem. Monica, Sonika and Manisha are partners in a firm sharing profits in the ratio of 2:2:1. On 31st March 2013, their balance sheet was as under. See the balance sheet. So capitals are given. Monica, Sonika, Manisha. Total capitals are 4,20,000. Total amount of the capital is 4,20,000. Reserve fund is here. It is mentioned. Creditors are 2,40,000. The ratio is 2:2:1. Monica, Sonika, Manisha respectively. Now fixed. Here assets side. Fixed assets 3,60,000. Stock 60,000. Debtors 1,20,000. Cash 2,70,000. So the total at the both sides is 8,10,000. Yes, now shall go next slide. That is the adjustments. Sonika died on 30th June 2013. It was agreed between her executors and the remaining partners that goodwill of the firm be valued at 3 years purchase of average profits for the last 4 years. Last 4 years. The average profits were 2 lakhs. So average profits were here where just a slide is not loaded. See here. Okay. So interest on capital be provided at 12% per annum. 12% per annum interest on capital. Her share in the profits up to date of the death will be calculated on the basis of average profits for last 4 years. Already is mentioned. Okay. Prepare Swanika's capital account as on 30th June 2013. Yes, okay. Swanika is died on 30th June 2013. We should take into consideration of the adjustments, so that we will have to prepare the Sonika's capital account. Yes. So this is the yes. Here balance brought down 1,50,000. See this. Sonika 1,50,000. Okay. Now reserve fund. Reserve fund is 1,50,000. Reserve fund is 1,50,000. From this 2/5 share is belonged to this deceased partner. So 1,50,000 into 2/5 is equal to 60,000. Okay. Now interest on capital. 1,50,000 into 12/100, 12% into 3/12, 3 months, or from the date of the last balance sheet to the date of the death is 3 months. We have to see it. June 30th June 2013. But the balance sheet is March. April, May, June are 3 months. Only that 3 months should be calculated. Interest should be calculated for 3 months on the capital which was brought by the deceased partner. Okay. So 1,50,000 into 12/100 into 3/12, 4,500. And profit and loss suspense account, profit 20,000. So we shall see the profit 20,000 in working notes. it can be seen. Yes. Average profits, it is given 2 lakhs. Clearly, it is mentioned in the adjustment itself that average profits is equal to 2 lakhs. Profit for 3 months is equal to 2 lakhs into 3 by 12, that is equal to 50,000. And in this 50,000, Sonika's share of profit is equal to 50,000 into 2 by 5th, 2 by 5th is equal to 20,000. Sonika's share of profit 50,000 into 2 by 5 is equal to 20,000 is the share of the profit of the Sonika, that is deceased partner. Okay. Now see, profit and loss suspense account 20,000. And another adjustment is here. That is goodwill. Goodwill. So goodwill is, first we shall see that adjustments in the, yes. Yes, average profits of last 4 years is 2 lakhs, it is given. Forms goodwill average profits into 3 years purchase. 3 years purchase. So that is 2 lakhs. So average profits is equal to 2 lakhs. It is clear. Goodwill is 3 years. 3 years purchase of average profit. So into 3 years. So 2 lakhs into 3 is equal to 6 lakhs is the goodwill of the partnership firm. Sonika's share is equal to 6 lakhs into 2 by 5. 2 by 5 is equal to 2 lakhs 40,000 is the goodwill. Sonika's share is equal to 2 lakhs 40,000 in 6 lakhs amount of goodwill, value of goodwill. So this is adjusted through the capitals in the ratio of gain. This should be adjusted. This 2,40,000 of Sonika's share is to be adjusted by Monica and Manisha in the ratio of 2:1. This is gain ratio. This is gain ratio. 2:1. So 2,50,000 is contributed by Monica and Manisha in the ratio of 2:1. See carefully. This is the gain ratio. 2:1 is the gain ratio. Gain now. Monica will contribute 2,40,000 into 2 by 3 is equal to 1,60,000. So 2,40,000 is a goodwill of Sonika, the share of the goodwill of the Sonika, and this is adjusted through the capitals in the ratio of 2:1. Monica will contribute 1,60,000, and in the same way, Manisha will contribute 2,40,000 into 1 by 3, 80,000. So they should be mentioned in the capital accounts of Sonika. See, by Monica capital 1,60,000, by Manisha capital 80,000. Okay. So now we shall see once again the credit side balance 1,50,000, reserve fund 1,50,000 to 2 by 5, interest on capital 4,0500, suspense account, profit and loss suspense account. This is most important one, and I think it is seen already. So this is the calculation of the profit. Average profits 2 lakhs. Profit for 3 months 50,000. Sonika share 50,000 into 2 by 5. Okay. See this. These are the entries at the credit side of the capital account of Sonika, and shall see debit side. The balance amount is to be transferred to Sonika's executor's account because Sonika is died on 30th June. So that amount is to be transferred to Sonika's executor's account. That is 4,74,500. So see, calculation of the goodwill is also seen. So now shall see from the beginning once again from the beginning we shall see this is the balance sheet. We shall review the problem once again. Ratio is 2:1. This is the balance sheet as on 31st March 2013. Yes. Capital accounts 1,80,000. Monica, Sonika 150, Manisha 90,000. 4,20,000. Reserve fund. This reserve fund is a fund which is owned by the all partners. So this should be distributed. This share of the deceased partner should be distributed to his capital, recorded in the capital account. Okay, reserve fund. And creditors also given. Here, fixed assets, stock, debtors, cash is given. Now, so goodwill of the firm is valued at 3 years purchase of average profits. This is the most important. Goodwill is valued at 3 years purchase of average profits. 3 years purchase. So average profit is 2 lakhs. 2 lakhs. And the total of the goodwill is 6 lakhs. See the calculation here. Yes. See this. Average profit of last 4 years, 2 lakhs. It is given in the problem itself, it is given 2 lakhs as the average profit. Okay. So firm's goodwill is 3 years purchase of average profits. 2 lakhs into 3, 6 lakhs. In this goodwill, Sonika's share is 6 lakhs. 6 lakhs into 2 by 5 is equal to 2 lakhs 40,000. This 2 lakhs 40,000 is, this is most important thing in this. So this 2 lakh 40,000 is borne by Monica and Manisha. 2 lakh 40,000 into 2 by 3, that is 2 lakh 40,000 into 1 by 3, that is 80,000. Okay. So these should be adjusted in the capital account. See this. This is 1,60,000 is borne by Monica and it is adjusted through her capital account. And 80,000 is borne by Manisha. Okay. Now share of the goodwill is over and gaining ratio, this is over, and the share of profit is also calculated. Average profits 2 lakhs and the share of the profit of Sonika is 20,000. So with this, you have understood the accounting procedure, accounting treatment of deceased partner at the time of death of your partner, and the profit ascertained based on 2 methods, that is time and sales, and other aspects have seen, and the capital account of the deceased partner is also seen. And we have seen one problem and made the capital account in detail. I think you have understood this problem, and I conclude this class. Thank you.